Welcome to today's video. My name is Madelon Vos and this is Madelon Talks. Today we'll discuss the most important Bitcoin and the macroeconomic related news of the week. We will start by the meeting of the month. We had Jerome Powell, the chairman of the Federal Reserve, talking about inflation expectations and monetary policy, or maybe even monetary tightening. After the meeting, we had Bitcoin, but also gold and silver and the stock market tumble. So what happened here during this meeting? We're going to dive deeper into that, and we're also taking a look at the latest news on Bitcoin. And in the end of this video, we will take a look at the price of Bitcoin and see in what area we're located right now and what might happen in the future. So for now, I'm going to put myself in the right corner of this video. And if you aren't subscribed to this channel yet, make sure to do so. You can do that by pressing on the red subscribe button down below. And also make sure to press the bell so you get notified when there is a new video online. Okay, we're going to start by looking at this tweet from Anthony Pompliano. And this was right before the Federal Reserve, Jerome Powell, chairman, was speaking about his monetary policy. And Pomp says this is just a reminder the entire world of finance is holding their breath, waiting to hear what is said during this press conference. And he says this is such an antiquated model. And he's right. I mean, it's so strange to wait and see what one person has to say about inflation and about monetary policy or policy tightening or interest rates. We're waiting for one person, and the whole financial world is looking at it and basing their investment decisions upon what one person or one central bank's opinions are or what they're going to do in the near future. And that's probably the worst. I mean, they have such an influence on financial markets and on markets everywhere that this has to stop, in my honest opinion. And Pomp says our children will laugh at the stupidity of their parents while they prosper under a programmatic, transparent monetary policy. And he probably means Bitcoin, but we will dive deeper into that later on. For now, we're going to take a look at the tweet of Jesse Felder because we saw that the Wall Street Journal was posting about the conference, and they said behind the Fed conference on inflation, some anxiety creeps in. And this is probably a very important one because Jesse has one argument that he mentioned in his tweet, and he says in March, just 5 out of 18 fund participants thought risks to inflation were weighted to the upside. So 5 out of 18 thought that the risk of inflation would be higher than expected. But in June, 2 months later, this has risen to 13. So 13 out of 18 think that, or at least the solid majority, think that inflation is more likely to turn out higher rather than lower than projected. So we're going to take a look at what is projected then, because the Federal Reserve is sticking to its story. The factors that drove the annual core CPI, this annual core inflation, up to a near 30-year high of 3.8% in May, are largely transitory, is what Jerome Powell said. So Chairman Jerome Powell pointed out several things in the conference, and one of the most important one was this. Our expectation is these high inflation readings will start to abate. The used car price surge will reverse as that for lumber already did, he said. Fed officials expect inflation to slow from 3.4 at the end of this year to 2.1 at the end of next year and 2.2 at the end of 2023. So what he's mentioning is that he is expecting that the inflation rate will go down again. But these 13 members expect inflation to be higher than projected. So the inflation could probably be higher. And they have a reason for that. And this is interesting because this Wall Street Journal article said as long as this increase really is transitory, as mentioned in the beginning of this press conference, the Fed should be fine. So that's what they're saying. The Fed should be fine if this is transitory. But if the supply shock push up the public expectations of inflation, which tend to be self-fulfilling, the Fed has a problem. So what they are now mentioning is that they kind of feel that if there is a tense of inflation and the public feels that this is becoming a self-fulfilling prophecy. So it's not the fault of the Fed, it's not the fault of money printing, it's not the fault of low interest rates, no. It's the people that realize that inflation might be coming and this will become a self-fulfilling prophecy. Or at least that's what they're saying. I don't know. This is completely the other way around. I mean, we have negative interest rates due to the failures of the central banks. And they say that if, and I will read it one more time, but if the supply shock pushes up public expectations of inflation, which tend to be self-fulfilling, then the Fed has a problem. It could no longer stick to its plan, waiting for full employment to return before tightening monetary policy. So that's usually what they want to do because they are very into MMT, the modern monetary theory, and this theory is saying that you can print as much money if you want to until you reach full employment. And in my honest opinion, I've spoke about this before, this theory sucks. Long story short. And he's saying that he's not going to wait for tightening the policy until they reach the complete full employment. If this becomes a self-fulfilling prophecy, then they will have to step in. While Mr. Powell said the rise in expectations hadn't yet reached worrisome levels, we don't in any way dismiss the chance. In that event, he said, we wouldn't hesitate to use our tools to address that. Price stability is half of our mandate, is what he's saying. So, to be honest, they don't really have any more tools to get inflation moved downward. If you take a look at 1970s and what Paul Volcker did, the only way to get rid of inflation again was to let interest rates rise pretty quick, and it was a complete mess, a complete monetary or a complete economic mess as well. And he said, we won't hesitate to use our tools. Price stability is half our mandate. And to be honest, price stability is 2% inflation, which means that if you have 1 meter, and we're saying that we are watching this meter staying stable, that we are going to expand this meter by 2 centimeters every year over and over and over again. So this means that we have 2% or 2 centimeter extra the next year. And then we will manage to keep that 102% at 2% extra. And then we will eventually go on and on and on. And this 1 meter will end up being 2 meters or being 4 or maybe even being 10 meters. And that's why fiat currency will die eventually. But okay, we have to go back. Because watching the Fed makes these monetary policy decisions and global financial markets anxiously respond to them is a good reminder of the transcendence of Bitcoin's full, transparent, and predictable monetary policy. And that's what Pompiliano spoke about as well. The prosper under a programmatic, transparent monetary policy. It's kind of strange. And if you take a look at it from another perspective, then indeed, it's kind of strange. Why are we watching one man signaling the first time that the rates will rise will be in 2023? I don't know. It doesn't make sense to me. But okay. Financial markets were completely anxious about what happens, or at least what this guy is telling us. And they are all about managing expectations. They're trying to manage expectations for the next couple of months so that the stock market collapse or something like that won't happen. But what did we see? Because he is projecting that the inflation figures will go down, the price of gold went down as well. And we've been watching gold for quite a long time. And this was the moment that Jerome Powell spoke about his inflation expectations. And why did the price go down? Why did the price of gold and Bitcoin went down? We will take a look at Bitcoin at the end of this video, but I'm going to explain what happened with gold. We have, when we're looking at economics, we have several different boxes. So close your eyes and see like 6 or 7 boxes right in front of you. Then we have a box for real estate. We have one for bonds. We have one for stock market, for gold and silver, for Bitcoin maybe even, and we have some other smaller boxes as well. So when it comes to economic behavior and the conjuncture of the economy, we're also always moving money around from box to box in order to make more profit in a several box. So when the inflation expectations are high and when the economic growth slows down, we are expected to go into some economic bad weather. And gold is always a safe haven for inflation when it comes to inflation. So all of those people that bought over here expecting more inflation, and that's why the price of gold went up. And now that Jerome Powell, the chairman of the Federal Reserve, said the inflation will rise or will decrease from this point, it's transitory from this point, then the price of gold went down because everyone is going back into stocks again or going back into real estate or whatever. They're going to look to put their money somewhere where it makes more money for them. So that's why the price of gold went down. We saw Bitcoin going down as well. But I want to mention something, because if there is more money flowing into this system, you have to take a look at the boxes, but then we have the money coming from above, and it's falling into some different kind of boxes, and this money of course is debt. We know that money is debt. And I must mention something, because on Twitter I spoke about this. This is the M1 money stock. And what we're seeing here is not normal. It's completely the other way around. But I want to tell you something, because we saw that Michael Maloney responded to this tweet, and he said it's currency, can't print money. And they call this the money stock. But to be honest, money is valuable and you can't print money, and that's what he said. So I replied to his tweet and I said the Fed calls it the M1 money, but we all know better, because money supply is the fiat currency supply, and all fiat currencies will eventually go to zero. Real money is imprintable. Mike Maloney mentioned gold and silver as real money, and I would like to add Bitcoin to the list. So we have real money, and this doesn't look like real money. Banks are seeing this. Banks are seeing what is going on in the financial market. They are seeing what is going on when it comes to the money printing and to their way of earning money, to their business model as well. And now Saxo Bank is becoming the first bank in Denmark to enable their customers to buy and sell Bitcoin. And Saxo will also come to other countries in Europe later or next year, because this bank is taking over smaller banks. For example, they've taken over a smaller bank called Bink Bank in the Netherlands, and they're going to take over, probably going to take over more smaller banks in Europe, and they might even let their customers buy and sell Bitcoin in other parts of Europe. So this is kind of interesting. Banks are looking for a new business model and seeing chances when it comes to Bitcoin. And even though Saxo Bank sees a business model when it comes to Bitcoin, the World Bank doesn't. The World Bank rejects El Salvador's request to help implement Bitcoin as a legal tender. Reuters reported last Wednesday saying that the international lender is concerned about Bitcoin's environmental and transparency issues. We are committed to helping El Salvador in numerous ways, including for currency transparency and regulatory process, the World Bank told Reuters. Well, the government did approach us for assistance on Bitcoin. This is not something the World Bank can give support to, um, given the environmental and transparency shortcomings. So they feel like Bitcoin isn't transparent enough. It's completely transparent. And they also feel like the fact that the environmental issues are shortcomings. To be honest, they just have to look at their own monetary system and what it costs, and it is way less than Bitcoin. But we have spoken about this so many times. I'm not going to do that over again. So they don't want to help with technical assistance. I don't know why, because this is kind of FUD. But we have had a lot of FUD lately. We have had so much FUD, but we will talk about it later on. And then we have Michael Saylor, because we know that Michael Saylor is really seeing chances when it comes to Bitcoin. He's dollar cost averaging Bitcoin every month with, I thought it was 15 million a month, and of course he had about a billion or so, or maybe even more at once. And now he wants to buy more Bitcoin, so he's issuing an at the market securities offering for flexibility to sell up to 1 billion of its asset class common stock over time. So he wants to earn or get more money into his company so he can buy more Bitcoin, or at least he can buy the dip. And then we have to take a look at this chart, because this is a really important one. Here we have the price of Bitcoin mentioned in these green bars in the background. And as you can see, we hit an all-time high around the 14th of April. Afterwards, the price went down. And what is the most important about this chart is that we see that the whale hodlers are increasing their portfolio. So the whale hodlers sold around the top and they are now buying back. This was the top, and you can see they started selling around the 13th of February, and then they sold quite a lot. And afterwards, when the price started to decrease, they bought more and more and more. So they're doing exactly the opposite of what the small hodlers did. And this purple line are the smaller hodlers. And the small hodlers have less than 10 BTC in their portfolio. The mid-tiers stayed almost the same. The mid-tiers have 10 until 1000 BTC, and the whales have more than 1000 BTC on their address. But as you can see, these whales are accumulating right now, and these smaller hodlers are selling. And this is exactly what Michael Saylor did as well. He is now accumulating Bitcoin. And then we have the Bitcoin treasuries. We watched the Bitcoin treasuries last month. And at that time, the total value of these large investors owning Bitcoin was at 5.8%, and now we're almost at 6.8%. So this means that the bigger companies increase their portfolios with over 1% in a month or so. And that's a good sign, because the whales are buying. And if we take a look at this chart from Plan B, we have seen the same. Plan B says 60% of the Bitcoin sold in May and June were bought at March and April and sold at a loss. 40% bought earlier and sold at a profit. So only 40% sold at a profit, 60% sold at a loss. And now we are seeing this, by the way, this is the April 30, this is the June 19, so they bought back here, they sold over here. And there are also 40% buyers that are in profit still. And maybe they're even looking for buying back lower or something like that. But it's really interesting to see. Plan B says BTC distribution looks a lot healthier right now. And I completely agree with him. If we take a look at the era, the cycle multiple, then we're currently sitting over here. So if we compare the eras of 2013, 2017, and this era, 2021, this is what you get. So here we have the blue one. The blue one is the 2013 era. This is the 2017, and this is the 2021 era. And this is the halving, the moment of halving, and afterwards the price went up. And this, it looks quite familiar. It looks like quite like what we've seen over here. It can also be something like this or so, but we're kind of moving sideways right now, and we have to break out. We have to form a bottom and get back to the normal level as we've seen before. It happened here already. It happened here as well. And this was kind of a sharp sell-off, just like here. And this is kind of taking quite long, and that's why Plan B said we don't want to stay for quite a long time around the 30s level. Bitcoin is below 34,000 USD, triggered by Elon Musk's energy FUD and the China mining crackdown. Of course, we had the China mining crackdown. It's about the hash rate going down because miners in China have to shut down, and it's causing a lot of rumors. But there are also some other things going on because people are saying that Bitcoin isn't fast enough, it isn't cheap enough. And what I wanted to say is, in El Salvador, they're using the Lightning Network for Bitcoin transactions, which means they're super fast and they are really cheap. It means that they're almost free. So you have to pay like 0.00005 or so for 5 cents or so for a complete transaction, which is super cheap. But a lot of people also don't realize that there is an easier way to pay everywhere you want with your cryptocurrencies as well. And when you want to do that, you can just choose your card. I'm looking, but I don't have it here right now. I will show it next week. But you can just choose a card and you can pay wherever you want. And I've been in Mexico, in Miami, and in New York for the last 4 months. And when you're visiting, especially when you're visiting the United States, then it's really great to have a credit card with you because your debit card won't work quite a lot. And using a credit card, you can get extra bonuses or something like that. But when you're using a crypto credit card, you will get a cashback. So it's not a bonus or points or whatever. It's not a loyalty program. You will get real digital currencies. We must say real digital money because we just spoke about the fact that currencies are always going to zero. But to be honest, it's really nice to just pay in the supermarket with a card, and no one can tell you you cannot. And you can use the currency you want to. You can put money on the card as well. So it's kind of great. You can also use stable coins if you want to use that as well. So in my honest opinion, it's really easy to pay wherever you want, whenever you want with your cryptocurrencies. It isn't hard to do so. And the store or the company gets their dollars or euros or whatever in their own particular currency. So it is possible, but it's also kind of fun, and that's where we started. We started with a tweet from Elon Musk, but next week I will explain a little bit more about how it works because it's super nice to use, and I like it more than using my own bank account. So we will discuss this later on. But for now, we're going to dive deeper into the tweet of Plan B because he says there's also a more fundamental reason that we see weakness in June and possibly also July. But his worst prediction for 2021, price on-chain base, so he's not looking at technical analyses, he's just looking at the on-chain metrics. For example, how busy it is, for example, the hash rate. You can have so many on-chain factors that have influence the price or influence on the price, might have an influence on the price. And he is giving his worst case scenario. This means that we're going to see it around 47k around August. In September we're going to see 43k. In October we're seeing 63k. November will be 98, and in December we will see 135 again. So that means 4 times where we are sitting right now, or almost 4 times 34k. So this means we're going to still see quite a rise, but he's talking about his stock to flow and not about his S2FX model anymore. But this might be even the worst case scenario, and we're going to see what's next. Maybe even for July we're going to see that the price is going down, but the whales aren't giving up, and there are no factors to worry about. Bitcoin isn't broken. We've implemented. Bitcoin is stronger. It's faster because we've implemented the Taproot update, and it was the most important one since we had SegWit. I'm not going to talk about it that much, but Taproot is quite interesting as well. Maybe we'll do it next week because we're talking about this stuff for so long already. What I wanted to show you is Google Trends as well, because if we take a look at the Google Trends, then you will see that we haven't reached 2017 levels at all. We've visited in May around, let's say, 25% lower than the interest we've seen in 2017, and right now we're sitting at a 33% from what we've seen in 2017. So this means that we have a lot to go, but this is great because the interest is slowing down, the retail is slowing down as well, and we can accumulate more Bitcoin before the price goes up again. So when taking a look at the price of Bitcoin, we have had a very rough time. I will zoom out a bit. We have had this head and shoulder pattern over here, and I will show you what happened afterwards. We saw this dip happening, and you could just calculate the target point, and it had a hit of 100%. So we went down quite fast. Then we formed this pattern. It was a symmetrical triangle, and usually symmetrical triangle has 50% upward, 50% downward chance of breakout. We broke out downward. We hit the target point of, I think it was 50% or so, maybe even a bit higher, but we didn't came up to the 100% down. So we went back into this symmetrical triangle. We broke out again, hit almost 80% of the target. We had 10% upward movement instead of a 13% one. And then we fell back. Here we had the meeting of Jerome Powell. No, this was the meeting of Jerome Powell, and we fell back, and we moved into this symmetrical triangle, which wasn't necessarily one to watch anymore, but now we're falling back. And as you can see, we have formed a head and shoulder pattern. So what I did was just grab this, calculating the difference, and then calculating the difference from the lowest shoulder band of the head and shoulder pattern. And then we saw this breakout evolve. I spoke about this in the Dutch community as well, and we're now on our way back to at least here. And as you can see, we are currently in this downward trend. So we went up, we went down, we went up again, we had some resistance, we had some support, and this means that we might see a price as low as 30k or so. But there's something else going on, because as you can see over here, we have these lows, and these lower supports are possibly a new support line for this falling price. And when taking a look at this support line, usually we say it's invalid because we need to have 3 touching points to have a valid line when it comes to technical analysis. But we have to keep this in mind because still this can be a support line, and this means that the price will go as low, maximum as low as 3 points to 32,000 or so. And what we want to see is some bullish divergence over here, some bull divergence. But we're not seeing it right now. We've had it over here when the bottoms on the chart went downward, but the bottoms on the RSI went upward. Then this was the purchasing moment, and afterwards we are now in this pattern. But what I wanted to say is that we haven't had high volume. We broke out on this level. We didn't see much volume. This was the volume that we wanted to see, way higher than usual. And also when we broke out upward, the volume was quite low as well. But it's easy to say it afterwards, of course. But for now, if we hold this 32,000, which will be great. Then this means that we are forming this falling wedge. And if we form a falling wedge in a trend that's already on the way down, then this means that we don't see a continuation, but we see that the price will go upward again. So then this scenario will be completely different from what we've seen before. And I know it's quite heavy to see the price moving in this range, for example, going down and up from 34 to 38 and then back to 32 and then up to 40. It's quite heavy, but this reminds me of a period in 2013 on which we had the price moving in like $50 or so, when the price was around 300, 400. We had the price moving to 450, then back to 300, 350, then again upward. So this is what kind of reminds me of that period in 2013. It was summer 2013, I think, maybe even a bit later. I don't know yet anymore. I think it might be even September or October. But the price went quite fast, upward and downward again, and it was heavy. So we're kind of seeing the same right now. If we break out upward, then we're going to be back around 43 or so, and that would mean that we're back around the level that Plan B spoke about. Let's take a look again. What time aspect we are. This is July. Let's say that it's gonna be maybe even a bit later. Let's say that we're going into the falling wedge completely. Let's say that we're breakout at the end of this period. Then we're going to see 40k or so upward again. And if we take a look at Plan B, he's saying August 47, and this is gonna be mid-July, and then we will go upward, so like this. So August can happen. But for now, we have to take into account that we can also go down this road, maybe even go down, and if we go down, then we will go down quite heavily. So keep in mind that we must hold this support line. We want to stay above 32 at least the coming weeks or so. We need to stay above, I don't know what this is, or above 30. If we stay above 30, then everything will be fine still, but we don't want to break out downward. But keep in mind that we are going to see lower levels from here probably. So that's the technical analysis for now. I want to let you know that I'm also on Twitter, on which I mentioned the latest news and the latest things that are going on. So if you want to learn more about macroeconomics, Bitcoin, or technical analysis, make sure to follow me on Twitter as well. And if you want to see more about what we're doing backstage, what we're doing in our spare time, and if you want to know more about what we're doing backstage or the latest news on Instagram, then I would recommend you to follow me on Instagram as well, so you will get notified when we have some interesting stuff. So for now, I'd like to thank you for watching again, and I hope you've liked this video. I liked making this video again, and please let me know down in the comments what you thought about this video and what you want to see more or maybe even less, or if you have any questions, let me know. Don't forget to press the blue thumb, and I hope to see you next week with a new Madelon Talks. Bye!